Hello friends, this is Professor Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. So my privilege is this, that I am here with you this day to talk on financial services. So we will be discussing this topic in two parts. So today at this moment I am going to begin with part 1. So financial services is the topic, and as the name suggests, this is coming from the topic we started couple of weeks ago, which is about financial system. Within the financial system, we talked about financial markets, financial institutions, financial instruments, and in the same series, in fact, one of the pillar of financial system is financial services. So, financial system, as we would have understood from the past, that it is essentially a system which helps mobilize funds from surplus sector to the shortfall sector, or the sector where there is a shortage of funds. That is the major function of financial system, and within, to ensure that this mobilization happens smoothly, timely, efficiently, we have couple of pillars which are financial markets, financial institutions, financial instruments, be it check or draft, financial services, and regulators. So that is how we have reached to financial services, the fourth pillar today, and in future we will be talking about the last pillar, regulators. Okay, so financial services basically they gained prominence, importance in India after LPG was announced by the former late Prime Minister Manmohan Singh, Dr. Manmohan Singh ji. LPG, liberalization, privatization and globalization, that was the policy which was announced in 1991, way back more than almost 3 decades now, 2.5 decades now. So that is after that period, after LPG, the financial service sector has gained momentum in India, right? So this, and in fact this particular sector has developed as an industry altogether, and not only in India, worldwide. So that's how important the financial service sector is. This is independent industry, and financial services, they are very, very vital for any economy's stability, growth, even to facilitate flow of capital, managing risk. There are so many more aspects of it which are very, very prominent or essential for any economy to grow, and also to ensure that economy stays stable. Okay, so the financial services have become integral part of financial system because of these aspects. They help us bring stability, growth, and of course no capital can flow from surplus sector to the shortfall sector without financial services being there. Okay, so basically when I'm talking about financial services, I'm talking about intermediation part of the financial sector. So we need some intermediaries for connecting funds from those who have surplus to those who need capital, right? So somebody is required in between, and that intermediation is primarily financial service. So that's what we are talking about. So financial services, if I have to define it, they can be called as financial intermediation. Okay, because of this discussion I just had. And another way we can define financial services are the economic activities which are provided by the finance industry, including banking, insurance, investments to help individuals, businesses and government. So let me just explain you. So if you go to bank and you want to move or you want to transfer funds from your account to your father account, or a businessman need to pay to other business for the supplies it bought, right? One is the personal example, another is the business example. So any of the two people or both of them, they went to bank, they want to transfer money. So the money is in his account, but the bank will, either transfer money through RTGS or whatever where you want it to be transferred. That service of extending you the facility to transfer money from one place to another is financial service itself, right? And for that, if we use check, then that is an instrument, and bank, it is a financial institution here, okay? Or other way, you got some draft, somebody has given you a draft, you went to bank to recover that money, right? So that draft is an instrument, but enabling you to encash that draft and get money in your account or in your hand, that service is financial service. I hope you are getting my point. Of same way, nowadays we are using UPI, uh, and we are paying online with through many platforms, through many apps. What is that? That is also a financial services, so it's need not to be going to a bank, going to an insurance company and claiming the policy. You have, for example, you have a fire insurance policy, and suddenly fire broke into your premises, in your office, in your godown, anywhere, whatever it is. So it was insured. So you go to the insurance office, you put up the office with the request that, yeah, this is the damage, you have to submit a proof, and you will ask them to pay you the damaged amount, like whatever the loss you have incurred due to the fire. Since you were insured, or your that asset whichever has been lost due to fire was insured, right? So this, claim settlement for the fire insurance policy or life insurance policy, that aspect, right, even that is a financial service. So because generally we look only up to banking part, or payment or receipt part, that is the most simplest way to look at that. Nowadays there's the complexity in financial services has gone manyfold, so all those services, even if you go to a bank to understand the mutual fund, how do mutual fund work. In fact, I visited one of the banks, a private bank, last week only, to understand the SIP, systematic investment plan. So what is that service? Just, I did not buy, I just went there to understand the SIP, for my own investment, personal investment. Even that service, where there's somebody, there's a counter, they are sitting there, they are dealing with the retail or institutional investors, and they are guiding people, or companies on the different investment options. Even that is a financial service. So financial service is a plethora of services we obtain, we avail from different financial institutions, from individuals, be it banking institutions or insurance companies, or individual or investment companies, etc., etc. We will discuss in detail. So that's what the financial services are, and no business, no individual, no government, in fact no government for that matter, can perform without taking these services, without the help of these financial services. It means the whole economy, be it individual or businesses or whichever sector you may talk about, they all are dependent for their financial needs, and the financial services are availed by all of us. Smaller thing of paying 10 rupees to a sabji wala through your Paytm or through your any an app or your UPI, even that is availing financial service, right? So financial services are essentially the process by which consumers and businesses, they acquire financial goods and manage their financial resources. It includes banks, investment houses, lenders, finance companies, real estate brokers, insurance firms, insurance brokers. The list is very, very long. So, but essentially, the services means processing the process which is been used by us for ensuring the movement of financial goods, financial services. That's what the financial services are. Now, financial services have certain key features, key characteristics in them. Services for that matter, whatever I am going to discuss, they all are actually characteristics of services as well. In fact, I have studied this topic in length. During my PhD, I have studied about marketing of financial services in Haryana state. I have taken few banks and I have studied. At that point of time, I am talking about decades ago, I have chosen certain financial services offered by the banks which were selected for the purpose of study, and even that was the first time when I started reading more about it. I was researching, I understood that services are unique, they have unique characteristics, they are different than products, the goods, right? For example, table, chair, computer, etc., etc., they are, of course they are goods, but services are unique in certain sense. We will discuss, that's what I'm going to discuss. And since I'm talking about financial services, it means those characteristics which are common, which are used or which are there for services are very much applicable on financial services as well. So first foremost characteristics of financial service is intangibility, second is perishability, third is customer oriented or variability, fourth is trust based or dominance of human element, and the last is inseparability. So what is intangibility? So services are intangible. I will talk about financial service later. Service in general, let's take the easiest example which you could consume, which could you understand. Hotel rooms, right, is a service. Hotels are into hospitality sector, is a service sector, right? Hotel rooms, in case one hotel has 40 rooms and out of the 40, 30 are occupied on 30th December 2025, right? It means hotel has capacity which is 10 rooms unutilized. So unutilized capacity, so rooms is, the availing the room for staying is not visible, that service, the fun, the happiness, the joy you get out staying there, right? It is not, you are not going to take away the room itself, right? Room is not your ownership, room belongs to the hotel, right? So that is intangible, the first thing. Same way, if we talk about traveling by air, traveling by even train, so that train seat, that doesn't belong to you, that one seat in plane doesn't belong to you. So that is intangible. They cannot, service is something cannot be touched, cannot be felt. Like products, table, chair, we can touch, feel it, see it, whereas in service they are intangible, they cannot be seen. Like dance, for example, you are watching a movie, you are watching a live dance or drama, so it's intangible, you can touch that person who is performing that art but not the art itself, right? So it's intangible. Same way, financial services are intangible, they cannot be seen, touched. That somebody at the bank counter is helping, is actually helping you with payments, with receipts, that is a service, right? That is an act which you cannot actually touch for sure. You can experience it but cannot touch it. So that is intangibility. Second is perishability. Taking the same example of hotel, where we have 40 rooms, 30 are occupied, 10 are unoccupied on 10th of, let's say on 30th of December 2025. So they are going to be wasted, they are going to be perishable, they are going to be perish, because we cannot store that, those 10 rooms sale for any future date. All the 40 rooms are available for 1st January 2026, right? But not for 30th December. So if we are losing those 10 rooms, the revenue from those 10, they are perished, right? They are perishable. So services, if not consumed when they are available, they become perishable. So and a seat in plane, if it is not occupied, if it is not taken, it is not sold, or a seat in a train or a car or bus, this they all went, they go for loss, they went away, right? They are not consumed means they become perishable, they are perishable. Same is financial services. Let's say if bank is if there's a two people are there on the cash counter, and for 30 minutes nobody comes to and get an draft encashed, the 30 minutes are lost of that person, right? It's perished. If there were people one after another for those 30 minutes, the service was used. Otherwise those 30 minutes are gone, that service available for that, the service was available because the person was sitting at the cash counter to pay you, to help you encash that draft or check, but nobody came, so those 30 minutes are lost. That's an example of perishability for financial services as well. Another key feature about financial services is they are customer oriented. So since they are customer oriented, it means they are not standardized. So there is variability in delivery, right? Products are produced in a factory, they are similar. We have all the phones we buy of a same particular brand, of particular model are same. They look alike, right? All the tables, if they are manufactured through the same process, same material, raw material, so they are alike. There is a standardization in delivery of those products. But in financial services, or in services for that matter, since they are customer oriented, there is a variation from customer to customer because of the need of the customer, because there is a variability, there is no standardization in financial services or services for that matter. The fourth point is trust based dominance of human element. Financial services are delivered where there is a very important role of humans. So dominance of human, so they are trust based. That's how, initially, if you remember, when we have online payment, even till date, people are hesitant in paying online because of certain trust issues, because human is not there, machine is working. So so human factor is very, very dominant in financial services, and they are inseparable. The last is inseparability, means the delivery of the service is at the time of consumption. The time of consumption and the time of delivery is same. Somebody is transferring your money from your account, it is consumed there and then. You paid by using your UPI app or any app, at that moment itself you use the service and then it is paid. So it's inseparable. The delivery and the consumption, they both are happening at the same point of time, right? So these are the unique or peculiar features of financial services. Now I would like to talk about why there is a need for financial services. There are a couple of points. Number one, mobilization of savings. Number two, facilitation of transaction. Number three, liquidity. Number four, capital formation. Number five, risk management and mitigation. Number six, efficient resource allocation. Number seven, economic growth and employment. And number eight, support for government. So let me explain these points to you. Number one, mobilization of savings. As I said, financial services are part of financial system, and financial system has an obligation to mobilize saving from the surplus part or sector to the shortfall sector. So, and for that we need financial instruments, financial institution and financial service, right? So bank is there and check is there, two things. So bank is financial institution, check is financial instrument, right? But there's nobody to help you, approve the check. What is that? Your saving is not going to mobilize, right? This is exactly the simplest, most, but the most effective example you can correlate with. So that is what is the meaning, importance or need for financial service. So mobilization of savings. Facilitation of transaction. No transaction can be completed without the service of, offered by either bank, insurance or any agent. So those transactions needed to be facilitated, and I will not deny that there are certain transactions which are now substituted by machines. For example, instead of drawing money from a cashier, we can draw it from ATM. So that is also a service given by the bank where human is not there, but to ensure the trust is there. There are many safety measures taken, for that matter, but the delivery is inseparable. You consume, you draw the money at the very same point, when you are actually dealing with the machine, ATM. Liquidity is possible because of financial services. The checks are honored on the spot, DDs are paid on the spot or issued, marketable securities are purchased or sold openly, and that ensures liquidity. So liquidity is possible, liquidity management is possible for individuals, for businesses, for government, for organizations because of the financial services, right? The fourth point is capital formation. Capital formation happens because if there's a complete production process, a complete cycle of production or services, right? So that is possible only if we have funds available to make to purchase raw material, to make payments to people who provided us services or who worked for us, to buy supplies, to pay for different cost, etc., etc., right? And then sell it off and then get the money, and that's how the capital is formed. So capital formation is possible because of the financial services. Financial services helps you pay, helps you receive, helps you, mitigate your risk through insurance. So these are the activities which help generate capital for you as an individual, as a company, as a nation. Even nations have the agenda of capital formation, so even that is possible because of the financial services, one of the pillars in financial system. Then the next point is risk management and mitigation. So what helps, how financial services help us in risk management, risk mitigation? Risk mitigation happens when your risk is being spread over more than one person, is mitigated, right? Risk management, individuals or companies or governments, they manage their risk by taking insurance, by taking advices, etc., etc., right? If you are managing your risk by seeking advice from a financial expert, so that is also the part of risk management. And if you are spreading your portfolio, your investment, you are investing in different portfolios, even that is your risk management. And who is helping you to do that? The financial service provider, the expert who guides you to do that. So risk management is possible, risk mitigation is possible because of the financial services. That's the point, right? So another point I want to make is efficient resource allocation. Resources for that matter are limited, right? For any individual, for any company, even for a nation. Forget about individuals. We are just small, small flies or small creatures on the earth. So the world is so vast. So resources are spread. Certain areas, geographical areas, are rich for one particular type of resource, another are rich for another type of resource. Within the company, the financial resources are limited, right? So the efficient resource allocation is possible because of financial services. How? So you are seeking advice, and then you are ensuring that you are spending only for that cause which is the most remunerative, most lucrative, most essential, right? So that is the efficient resource allocation that can be happening, that can happen if you are seeking advice, if you are using a service to ensure resource is mobilized from the surplus to the short sector. So that is the efficient resource allocation for individual and for a country, for an organization. If one unit has surplus of money, it is transferred to the another unit. If one office has surplus money, it is transferred to the another unit. If one government institution has some surplus money, it is transferred for some other government or private purpose through investment, so that resources are utilized to the best of the possibility, right? Because of the financial service, because there is some intermediation happening which is mobilizing those resources, and because of this efficient mobilization, the resource allocation is in the right direction, right? So we get to know that which company is growing, that is where you will invest, so you will get to know which sector is growing. So this automatically the resource allocation takes place effectively. And because of this resource allocation, risk management, all these things, the economic growth is ensured, right? Economic growth is of course is only assured if our financial system is doing well, because financial system is part of an economic system, right? And economy, for the growth of economy is very very important that all economic parameter, be it purchase, production, consumption, savings, everything is done effectively, and financial services play a role in all of them. And that's how there's a need for financial services. And if economic growth is possible, is happening, the employment is certainly happening. Employment is generated because of the movement of funds, resource allocation at the right place. Work is employment possibilities get generated, and the employment goes up because of that. And finally, last thing is that the financial services, they not only help individuals or businesses, they do help government as well, be it state government or central government or any type of government or government organization. This also help governments also, because even government seeks loans in the form of treasury bills, bonds, etc., etc., and government needs different functioning of different part of the economy to ensure the country grows, employment is generated, production happens, etc. So for every aspect of this growth, government is seeking support for financial institutions, financial markets, financial services as well, right? So these were the points with respect to importance and the need of the financial services. I hope you were able to understand what financial services are, what are their peculiar characteristics, and why there's a need for financial services. So time to sign off, friends. Thank you very much for being with me. Thank you.